A tale of two tax scenarios. All right, yeah, you can see it. You ready? This is fun. I do this on occasion, but I always enjoy doing this one because, you get new people here and everything, and I do so many videos that no one can watch them all, including myself. So we're going to have Josh right here and Pablo right here. All right? As you can see, make sure this will work. Both Josh and Pablo have $60,000 of income. You see that? Pablo's got $40,000 from Social Security, $20,000 from IRAs. Josh has $40,000 from IRA and $20,000 from Social Security. Both have $60,000 of income. So the question, and I'll ask you right now, and I ask you to put this in the show notes, the comments. Who pays more in taxes? Is it, write down in the comments if you would, because it helps me with the algorithm. Who pays more in taxes? Before we go into this, would it say either Pablo or Josh? Pablo or Josh. So you can put that in the comments, that'd be great. But if Pablo pays more or Josh pays more, even though we both have $60,000, all right, we're gonna be the same age. We're gonna say we're both 67 years old. All right, so let's go into this. We'll start with old Pablo. All right, so the first thing we got to do is figure out what our provisional income is. And we're going to say we're both single, by the way. We'll say we're both 67 years old. All right, so what's Pablo's provisional income? Well, his provisional income is 1/2 of Social Security. It's $20,000 plus the $20,000 IRA. So his provisional income is $40,000. How much of that is subject to tax? Well, we know 0 to 25,000, nothing is. 25 to 34, and then anything over 34, 0.85. So in this case, there's 0 to 25. He's got 40,000 minus 34,000 leaves, what's that, 6,000 here and 9,000 there. So we take 4,500 here, and we take 36,000 times I think it's 6,000 times 0.85. It's 5,100. Yeah, I should have known that. 5,100. All right. So combine his provisional or the taxable amount of his Social Security benefit is $9,600. All right, so $9,600 is the taxable amount of his Social Security benefit. Now let's go over here to your old buddy Josh. We have $40,000 of IRA. Half my Social Security is $10,000. All right, so we have $50,000 as provisional income. Same numbers, 0 to 25 equals 0. 25 to 34 is 0.5, and then anything above 34 is 0.85. So I also have 0 here, 9,000 here, and then we got 16,000 here. All right, so that's 4,500, and then 16,000 times that by 0.85 is what? 16,000 times 0.85 is 13,600. So we add those together, 18,100. All right, so basically I have double the amount of my Social Security benefit that's taxed. However, it won't be 18,100. The reason for that is because only 85% of your Social Security is subject to taxation. So we won't do that. So we know that 85% of 20,000, what's that, 17,000 bucks times 0.85? Yeah, $17,000. So $17,000 of my Social Security is subject to taxation here, whereas $9,600 of Pablo's Social Security is subject to taxation. Almost twice Pablo's Social Security is subject to taxation for me, whereas Pablo has twice my Social Security benefit. Tell me that ain't nuts. All right, so now we're just going to look at old Josh. So we take our $17,000 of taxable Social Security. We add the $40,000 IRA, and we have $57,000 of AGI. $57,000 of AGI. We're just going to say it's a 13,000. I think it's 13,600 standard deduction. SD. And so we have, I need my trusty calculator, minus 13,600. $43,000 is our taxable income. $43,400 is taxable income. And he's over there making a mess because he doesn't like taxable income. But Pablo, that's me. That's not you. So let's go over here for old Pablo. That guy's such a nut. I took him to a walk in another neighborhood today, and he found all kinds of new friends. It was pretty funny, actually. So we got $9,600 as Pablo's taxable Social Security, plus his $20,000 IRA, plus the $9,600 taxable Social Security. So his total AGI is $29,600. All right. Subtract his 13,600 is standard deduction. His taxable income is, what's that, 16,000 bucks, right? Taxable income. Oof. So my taxable income is at 43,000. His taxable income is 16,000. My taxable income, I believe, is going to put me in the 22% bracket. Let's take a gander, shall we? That's married. Yeah. So this is last year, but still roughly the same. So 0 to 9, roughly 9,500 is 10%. 9,500 to 38,000, yeah. To 38,000 is 12%, and then anything over 38,000 is 22%. So Pablo is knee deep in the 12% bracket. Look at that. It's crazy, right? I mean, so he'll have, so let's see, 16,000 is his taxable income minus 9,500. That's going to give us, it's even worse than what you're going to see here in just a second. 16,000, that'll give us what, 6,500 is what that'll be. Times 0.12 times 0.1. So we're going to have $950 of taxes the first, then we got 12% on 6,500, and I'm not smart enough to figure that one out. So 6,500 times 12%, $780. So Pablo's taxable income, 16, 17, $1,730 is Pablo's total taxes. Total taxes. Nuts. Let's go to old Josh. All right, so Josh here now, I got, let's see here, what do you say, 9,500. So I got $43,000. Let's erase some of this stuff here. Yeah, this is crazy. I guarantee most people have no clue. No clue. So we got $43,000 of taxable income. All right. Oops, I'm going to do my black pen right there. 4 minus 9, we'll just say 9,500, which gives us, hold on just a second. All right, so now, no, before, here we go. I got you. So we got 38,000. Oh, here we go. Here we figured it out. 38,000 minus 95. There we go. So we got 28,500. Let me get rid of that. 28,500 will be taxed at 12%. So 9,500 at 10, 28,500 at 12. And what's the difference between 43,000? So let's calculate that. 43,400 minus $38,000. Yeah, 5,400 at 22. So we get 9,500 there, 950 there, 28,500 times 0.12, 3,420, and then 5,400 times 0.22, 1,188, plus 3, 420 plus 950, $5,558. So I'm paying almost $4,000 more than Pablo in income taxes on the same exact amount of money. The same exact amount of money. The hits get worse here, though. Let's just say we also had $10,000 of qualified dividends. Just for simplicity, if we had $10,000 of qualified dividends or long-term capital gains, tax-free over here, because Pablo's still knee-deep in the 12% bracket, it's taxed at 15% there. All right, so not only do we have $4,000 more in taxes than Pablo does on the same amount of money, but if we had qualified dividends or long-term capital gains, I pay tax on that. He won't, because he's still in the 12% bracket. Tale of two taxes. All right, we'll see you.